Well, hello, everyone, and welcome to the latest edition of Conversations with a Pro Trader. I'm your host, Greta Wall, and joining me today is Scott Redler. Scott is a professional trader with T3 Trading Group and the leader of T3 Live's Alpha Team virtual trading floor. Thanks so much for joining me for this today, Scott. It's a busy day in the market, huh?
Yeah, definitely a very busy day.
Yeah.
A lot of focus today.
hmm
Just with the end of the year coming, everyone wanted to figure out if there's going to be a fourth quarter rally or not. With most of earnings season behind us, today definitely was very important.
All right. So before we get into everything that happened just today, really, I want to start off with you giving me a grade of your week of trading so far. So we're halfway through the week. So on, the typical school grading scale, an A to an F, how would you grade your trading and why?
For this week,
hmm
I'd have to say I give myself an A minus compared to my last few weeks because
Okay.
we did have that nice move on Monday. If you remember Friday, the market made a new weekly and monthly low in the S&P cash, so we
hmm
opened pretty flat and flexible. And then on the move on Monday, you really saw a lot of the leadership start to present itself. So with that being said, I've been long a few of the key go-to names that we'll probably go over since Monday with some SPY calls. And all of
hmm
a sudden today, a lot of them paid us for taking the risk and managing it with our tier system. You could always be long a lot more, but like I
hmm
say to all the Alpha team members and those on Regular All Access and everywhere, just you don't need to be in everything to net money. And
Right.
sometimes if you're in too many things, you're not going to trade it the right way. If you're in just enough, you can manage it. And as long as you have a good day and then start a string of good days, you have to be happy. And so far, I think a lot of people that are in the community, are having a good week and trying to get themselves back on track because it's been a very tough market.
All right. So for everyone who's here with us live, if you've been here before, you know this, but if you're new, thanks so much for coming. This is a conversation between myself and Scott, but also you guys and Scott. So the first half here, we'll discuss all the news that happened today and is impacting the market. But in the second half, we'll be sure to get to the audience questions. So I've put a comment in the live chat on LinkedIn where you guys can see where to submit those questions. And then in the second half of this, I'll make sure to ask Scott all of them. So as they come up, ask them. They will be answered, I promise, in order as they're asked. Okay, so Scott, news of the day, the Fed keeping rates unchanged. As expected, there was no surprise there. Give me a reaction to today's decision and then the chairman's press conference afterward.
Well, I think that he didn't change much from
Mm-hmm.
September. So without any new language, I feel like no curveballs happened, and the market was trying to bounce this week. And seasonally, we're in that period where we have to bounce soon, otherwise there's no fourth quarter move. So
Mm-hmm.
I feel like we kind of, had a few parts of the day. We got kind of lucky that as of the first part of the week, like I said, we got long some risk, and then today, this morning, I did add to it because just real quick, if you look at the chart of the spies, which I'm going to share right
Mm-hmm.
here, it felt like there was, room. So with that being said, if you look at the chart of the spies that are up there, you will see that that was Friday's low, and then this was
Mm-hmm.
Monday. This Monday move kind of got us in some key names, and then yesterday we held in there, giving some conviction. So I think, but a bunch of us went home long, thinking, hey, we could be at least long into the Fed. So this morning, the futures were down. We bought a few of the names that we've been managing, bought some spies, and then by the time midday, we already hit some resistance. So we didn't have to take that much risk into the Fed because as a trader that trades for a living and you have to be right every day and have it add up. Sometimes a
Mm-hmm.
binary event, too much risk on it could give you a leg sweep. So P.S. Um, he came out with the statements, and the range in the SPY got very tight. And then pretty much as he spoke, and it felt as if he's closer to being done than not, a lot of the key names stayed strong and the SPYs continued. So it wound up being a really good trading day where now I do think it's going to be a little data dependent, which is what he said, meaning, bad news is still bad news for a while, so they can be done. And then at some point, maybe next year, which we don't have to look at that yet. It's bad news could turn into recessionary talk, into high valuation talk, and that could be a different narrative. But for now, it feels as if we could be in a new active sequence where certain dips are buyable. We'll be able to rotate through stocks and hopefully make some money on a more consistent basis.
Hmm. All right. Uh, Go ahead and pull that chart down if you can, just so we can get back to you and I on screen. There we go. All right. So as you mentioned, Powell's message was pretty much the same. You know, we're staying data dependent. We're not committing to any that we're done at this point. But the statement, if you look at the red line of the statement from the FOMC, it did include the addition of tighter financial conditions, not just tighter credit conditions. That tighter financial conditions are weighing on economic conditions. Economic conditions. Many saw that as a nod, of course, to the surge in Treasury yields that we've seen in recent weeks, and many see this as a signal from the Fed that they don't think another rate hike this year will actually be needed, even though Powell, wouldn't commit to that in the press conference. Do you agree?
I do. I do. I
Mm-hmm.
think finally you're getting the trickle down. They raised rates a lot in the past year, and it wasn't really getting filtered into some of the economic data. And the consumer's been resilient, and companies continue to, unemployment rates stayed low, and finally you start to see some of the higher for longer infiltrate into the economy, which kind of goes with those statements where things are slowing down,
Mm-hmm.
and the TLTs and rates have gone to where he thinks they might be without him having to do more. So I do kind of think, I don't think there's going to be any more rate cuts. Rate increases this year. It's just going to be a matter of how do things slow down in the first half of next year,
Mm-hmm.
and how does the market respond to that? And then if the S&P goes down, just say 10% into the first half of next year, maybe all of a sudden they start cutting because of sentiment. But for
Mm-hmm.
now, all of a sudden, again, the S&P goes to 4,400 or 4,300 by year end, and then has a good, first few months. I don't think the Fed's going to be cutting rates whatsoever, because that will show things are too strong. And then who knows, maybe then they do another quarter. But so at this point, where we are here, again, with I'm going to put the chart up one more time of
Mm-hmm.
the spies. I just don't think that they're going to be cutting rates anytime soon, and unless all of a sudden things get materially worse, and that means the stock market gets materially worse, and that's probably a first half of 2024 story. But for the rest of this year, some people like asking me where I think, just say, the spies could go in general, which we could probably also get to. I would think that if this is the start of a move based on today's FOMC and earnings, we probably don't get below this 416 again. Like, maybe we come up, digest, and I do think there's a good chance that maybe we can get into this zone, but I wouldn't think we're going to start getting too much above this whole area. So like 430 to 433 would be my guesstimate. I like to do these charts in front of everyone, maybe even a tiny bit higher. It depends on the pain trade, if a pain trade starts. But this would probably be a likely spot if between now and end of the year, maybe a little bit higher.
Yeah. Okay. You've talked in your analysis of the market that this has been a hard market to navigate since the last Fed decision. Hard to find opportunities, really stuck in a range, and then you get these fake outs. These days that are like, oh, it looks like, well, we might be turning around, and then it just drops the next day. So do you think today's message from the Fed changes anything for the market heading into the end of the year?
Well, it's been a very, very range-bound market, and it's probably going to stay that way. But
Mm-hmm.
sometimes you get a few weeks where you have some continuity, where you don't get surprises, and you don't get curveballs, and you don't get misdirection, and you don't get predatory action. If you the second quarter, there was a really nice trend where a lot of traders did really well.
Mm-hmm.
And tech led the way, and it had a nice move. And then, even though we were pretty much able to see that we put it in a summer top, it wasn't the easiest to be short, because every time we closed on lows, they gapped up and they made you feel like you were wrong. And then every time it looked like a long, they went the other way. But for now, it would be nice, considering it's November 1st, that we have between now and the end of the year, perhaps once we get through Apple earnings tomorrow, it'll be a little bit clear that you could buy some of these mega cap tech names, and you could buy dips and try and massage them and use a tier system, create cash flow, let the market make you some money, besides just testing little levels and having risk totally off because of not knowing where the market would be going next to the downside. So at this point, does does today's Powell message mean that it's a green light to just hold positions and close your eyes? No, but
Mm,
it could mean that there, we're gonna have to realize when important data is coming out. Like again, jobs reports
right.
Friday.
Yeah.
So but it would be nice to be able to make a trend of higher lows and higher highs and have stocks, which we just
Mm,
saw, make a new high on the week versus just range bound trading where you have to buy them when they look bad and sell them when they look good. We like to buy them on a dip, add to them when they break above a level, then sell them into strength, and then buy a dip and do it like that. At least I
yeah.
do.
Yeah. So ahead of the pause from the Fed today, the Treasury Department released some important numbers. They detailed their refunding plans for future bond sales, which includes larger auctions. This is, of course, complicated stuff if you're not in the bond market. But um, immediately after that release this morning at it was around 8:30 a.m. Yields shot lower, stocks shot higher, or futures shot up. So as a trader, what did that message from the Treasury maybe signal for you about the market?
Well, as a trader, you need to know relationships, and
Right.
when the TLTs have gone lower and yields have gone higher, programs were there to sell equities. So when that
Mm-hmm.
happened and the TLTs bounced, you saw the spies, which were red, go green, and if you were trying to be long, your P&L popped, which mine did, and then it gave you a little clue that hey, maybe there wasn't that much of an issuance, which people were worried about because of Congress saying they needed 150 billion dollars now for the Ukraine and for Israel, and where are they coming up with that money? And just so people are worried about, this we're in a spot now where the deficit matters. You heard
Right.
Jeffrey on TV, the bond king talking about how Washington and Congress is spending like drunken sailors. How is it at some point there's going to be a reckoning? So
Mm-hmm.
we can't trade with the plan. It's not going to end well. We need to be in the moment, know what's leading what. And again, if you go like just say, let's go back to the chart for one more second.
Mm-hmm.
So if you go back to the chart, you'll see that as a trader, we've been watching the TLT, and at this point, the TLT, which has been in a downtrend, okay, pretty much for ever since I remember when I wrote, I'm like, if the TLTs break 99, this channel, it's going to matter. It did right there, and it's been in a
Mm-hmm.
downtrend. So this morning or today, it finally poked its head above this inside range. So if this is going to work its way up towards the 21-day or higher, that means yields are coming in, and that means the computers are programmed to sell when yields go higher. Might actually be buyers, which could help a move in the next few weeks, which would give us a little bit more confidence to hold some long. So I would say
Mm-hmm.
82.42 was a big level in the TLT. Kind of just took out this spot today. If we could see a bounce back here, I would think that would help equities,
Right.
which we're starting
Yeah.
to see.
Mm-hmm. Mm-hmm. Yeah, because bonds and equities tend to have that inverse relationship. As yields go down, stocks go up, etc. All right. So on top of the Fed, as you mentioned, the labor market is in focus this week as well, not just the central bank. We did get ADP's private employment report this morning, and that showed a gain of 113,000 private sector jobs in October. That was lower than expected by about 17,000. How indicative do you expect this report to be for the official report from the Labor Department that we're going to get on Friday?
Well, it seems like the ADP report is always a bit more honest than the one that
Yeah,
gets issued from Washington. So
it does.
it
Yeah.
does give some clues that hey, maybe it could be lighter on Friday, but there's still some risk there. But it's heading in the right direction. It's not falling apart, so it gives it a
Mm-hmm.
little bit of a Goldilocks type feel where job market's still strong, but it's coming in. That's what the Fed wants because it wants
Right.
to make sure inflation is being muzzled somewhat. So it's giving some clues that Friday could be softer. Let's just hope that they don't finagle the numbers as they usually do with revisions and this and that.
Yeah. It's interesting. Like the last jobs report, it was that, a huge beat. I think it was like double expectations. But when you look like deeper into the report, there's things like way more part-time jobs than full-time jobs and signals that people may be working 2 or 3 jobs instead of just one job. So maybe, it's not new individual workers in the labor force, but it's, one individual worker taking on more than one job that can signal, problems in the economy. Uh, do you think that that is something that needs to be kind of looked at with more nuance when we're talking about the jobs report?
You know what? I'm a simple man.
Mm-hmm.
You know, and they call me a cocktail napkin technician because I don't look at every little granular indicator.
Mm-hmm.
So, you know, when that job's info comes out at 8:30, there are going to be people that go through with a fine tooth comb. I
Mm-hmm.
probably won't. I'm going to look at where we are, how overbought we are, where the next level is, what the reaction is to it. I try
Mm-hmm.
and use a little common sense, but I'm not smart enough to know what every little thing means, and then the revisions and the this. You know, do I want to see people having 2, 3 jobs to make ends meet? No. So and either does the Fed. That's why they want prices to come down so everyone can afford things.
Yeah.
But I also know this. You look at the jobs, the JOLTS, you know, report or
Yep.
whatever that is. There's like 8
Mm-hmm.
million jobs open. So if you want a job, it's around. You know, and I know,
9.6 million. 9.6 million today was the number. Uh-huh. Yeah.
maybe they should stop giving out free money so people get off their tush and get out there and get a job. Did I say that? Anyway,
Um, so
I'll tell you how I
talk
really
about
feel. I know.
talk about your strategy heading into binary events like the jobs report. You mentioned earlier these things are going to be important to look at as we head into the end of the year, especially with that final Fed meeting coming up in December. So, what do you do ahead of a jobs report? How do you approach it as a trader?
Well, it depends where we are. Like right now,
Mm-hmm.
we're up 3 days in a row in the SPY, so chances are we could stretch a little bit more, but we're a little overbought. So I'll try and be less long, but if I'm sticking with the swing position that I like, you know, I'll take some risk because
Mm-hmm.
if all of a sudden the jobs report's a little hot and those names go lower off of the binary event, you know, I'll be lighter and I could buy some in the hole because you've been getting rewarded to buy in the hole. If all of a sudden, you know, they don't reward you anymore for buying levels to keep it special, then I get out of it and then I'm back to more tactical. But
Mm-hmm.
you know, you look at a jobs report, well, we'll see what happens tomorrow. But again, you go to like a, you know, the screen share and you go to um, just say the the spies again. Um, it just had a decent move into this area, so it's not like we're oversold. It all depends how we're going in. Like right now, we were
Right.
up. It was Monday, Tuesday, Wednesday. You know, if we're up again tomorrow, you know, into this area, it's going to be hard for things to continue to rally. It's going to be day 4. But if you're also trying to short it into a jobs report, you never know what could happen. Then all of a sudden that
Yeah.
can cause a, you know, crazy pain trade. So I try and be more in options during
Mm-hmm.
a binary event, so at least I know what my risk is because risk is premium paid.
Right.
But there's sometimes I'll stay with some names that I've been with for a while, but just do less just in case something happens where, you know, I don't lose multiple days of P&L because I had too much risk into a binary event.
Hmm. Great. Okay, so you mentioned Apple. There are still some big earnings on the calendar this week, and Apple is the big one after the close tomorrow. Go ahead and you're going to pull up the chart. Okay, great. So you've been kind of hands off on Apple in recent weeks. The stock hasn't been doing very much, but this is the finale of the mega cap tech names to report. So what are you expecting? Do you have a specific strategy for Apple heading into earnings tomorrow afternoon?
Well, it kind of just had its oversold bounce, right? On October
Right?
26th, it was 165, and then today it closed near, what was the high today? The high today is 170, wow, 174.22.
Mm-hmm.
So had a pretty big move. So it's not oversold on a short term, but then if you look on the intermediate term since the summer, it's been downtrending. You have a high, lower high, lower high. You know, you could go into here and still be in a downtrend. And my gut tells me I don't understand how the report could be so strong, just for the fact that I think in China they're having a few economy problems. I know during the pandemic, most people that got their checks all upgraded their phones, and with some layoffs and this and that, it's you know, it's a high and I just don't see this report being so great. I know the
Yeah.
services, you know, I'm paying probably up to $30 a month on things on iTunes or the App Store that I don't even know. So the revenue from the App Store is like top, could be like a top 10, you know, company out there. But anyway, I don't have any FOMO here. What I will do
Okay.
though is you know, recently I've been in a few other names like a Microsoft, a Netflix, and a Meta, where I feel like if Apple's good, it'll push tech up and I'll get rewarded. If Apple's not good, chances are those other companies already came out with their earnings. I'll be able to buy the dip there. So I feel kind of good trading the other names, not that one. And that one will just give me a reactionary move in order to figure out what I need to do with my existing swing trades.
Interesting. When we zoom out on Q3 earnings season as a whole so far, what's your take, your thoughts on kind of the results we've seen up to this point?
Fine. The results for the banks, the reaction wasn't great. Those earnings were fine and they went lower. And then you're starting to see some, better reactions. Like I thought today was interesting. Like today, I went over AMD with many from the Alpha team as well as Federal Access. And could you start the chart up there?
It's still up there. Yep, I see it.
Okay. So I was like, guys, I feel like sentiment around AMD is really low. So let's just put on a call spread. So I put on a 100 by 106 call spread. So this is the Alpha team right here. They get to actually see my position. So if we go here on the Alpha team, which will show the screen, I had what I have on? I had a 100 by 106. So I was risking $2 to make $4. That's 200%. So we put that on. When I saw it trading last night, I was like, I'm like, maybe it's priced in from 132 down to 93. The guidance isn't horrible. So this was actually, this was my content. So I would post charts to the Alpha team and to Redler Access. And sometimes in the 630 Club, if you're not even a member, you get a free, throw a bone in your doghouse. And this morning, I'm like, maybe it goes red to green and has it priced in. It would be good for the semis in that case. So what happened with AMD? Not only did it go red to green, look at the size of that move. So some people bought other semis. So the thought process around it is what helped me make good money for the day. Besides having options on for a binary event, it also showed you that some of these discounts from 130 to 93. It's not going to need a blockbuster report in order to, have a relief rally. So we'll see, what happens with Apple. Apple also, again, if you go back to Apple now, it's not on the lows, but it's, well off of the highs. So we'll see if it has an inline report, probably could be just fine. If it misses, maybe you could buy a dip, and if it beats, all of a sudden it could be into here. So, that's really my thoughts on earnings season, is that it was fine. The market's in one big range, and most of these things are in one big range. And depending on what name reported, like Microsoft needed a good report because a lot of money was hiding there. Meta needed like some of these things need a good report. AMD from 133 down to 93 didn't need such a good report, and it actually gave you a good opportunity if you knew that, to start the trading day.
Yeah, the AMD report was it was interesting to watch the reaction, because yesterday after the close, the reaction, initially was okay, and then the guidance was light for Q4, so then the stock was down, and then, then the call was better than the guidance, for 2024. So it's, interesting to see how stocks just bounce based on so many different little tiny parts of an earnings report or a conference call. It's like one little thing someone says can totally impact the stock. Do you, as a trader, do you trade more actively during earnings season? And what is your strategy? Like if you were going to zoom out on your major earnings strategy for kind of any earnings play, what is that?
Usually what I do is I'll only take options into an earnings play. I don't care if I have conviction or not. You could be wrong. You could wind up getting hurt if you take the stock and give back what you made methodically over the course of a few weeks and a month. What I also do is I write down levels, so I know that when it does report, what level does it need to get above and stay above after hours. So if I want to trade something after hours, I know that level. I'm prepared with that level. I know if they miss and all of a sudden it goes down, what level is that? So again, you go to AMD like yesterday. So I was really prepared coming into it. I'm like, maybe if it goes lower and it holds 93-ish, you could be a buyer after hours. So some people were buying. Hold on, let me get share. Is my screen shared?
Not right now.
Oh, hold on. So here it is.
Yep.
So it was good to know levels. You know, it's good to know that 93-ish was the recent low. So after hours, it never got below 93. So I was armed with levels to trade after hours, but then also in a call spread, I wasn't in the stock prior to the print just in case it fell apart. And then it
Right.
was good to know where this descending trend line was, which it got above. And now chances are it'll be good to know where this is, okay? Because this will probably be, you know, a resistance area that will be hard to get through. But all in all, you know, you write down where it could potentially go and what the support is, and then that's how you also could put together your call spread based on, you know, where you could see it getting over and where you could see it having a problem. And I actually thought it was not going to be able to really get above 106 where it broke down from, and I was wrong, which is fine. And again, being prepared with levels that you want to see something happen at is good into earnings, and also taking some kind of option play for a stock itself. So this way, if you feel like you're going to miss something, risk is premium paid, and if you're right, you get paid, and then you could afterwards you get paid also. Like, look, let me just show you something with Amazon. So Amazon, I didn't play. Okay, so I give you a post earnings play like Netflix did. Okay, when you have earnings come out, what you want to do is you want to see the candle that gets developed post earnings to figure out what type of move it might have thereafter. And if you look here at Amazon, Amazon had a big gap up. Okay, never filled it, stayed really strong, and then the day after got above the post earnings high. And now look at that. That was a strong move, all based on the fact that this, you know, never got filled. So that was a post earnings play where you didn't even have to take options into it, which I didn't. Looks very similar to Netflix, where Netflix had a gap up, gave you an initial move, came in, never filled this gap. Now all of a sudden, it's trading in the same direction of the gap. Not with the same power as Amazon, but sometimes it doesn't have to. So now I'm long, you know, Netflix. I'm not in Amazon right now. I was in it earlier this week, but bottom line is this was a post earnings strategy where if it holds this pivot here, chances are there's a lot of power behind it. And now we'll see if this clears this ascending trend line to continue to the upside.
Great. Let's get to some audience questions now. Our first comes from Eli. I'm going to go ahead and pull down the chart just for this right now.
Sure.
Okay. You might need a chart for this, but he asked, when you scalp SPY or AMD, what is your usual stop loss? What is your minimal upside gain?
Hold on, I was just checking one thing out. Saw some earnings coming out after the close. Just wanted to see something. Sorry.
You're a trader.
Yeah, I am. That's what I do. I got a lot of different hats.
Did you hear the question though, or do you want me to repeat it?
You could repeat it. I'm sorry.
All right. So let's say he asked, when you scalp SPY, what is your usual stop loss? What is your minimal upside gain?
Well, when I'm trading a situation, I have an idea, and if that idea doesn't change, I try and stay with it. If the parameters change intraday and it's not as strong as I thought, and it breaks a certain level, if I'm in it for just a scalp or a trade, then I get out of the way. I usually try and map out resistance areas on where I think it can go if I'm right. So I use my tier system to net some money when I'm right, and then I try and hold a little bit to bigger areas where I see how it reacts, and I try and, you know, reduce around there. But I'm always trying to use a tier system so I can make a little bit of money, and I can stay with the runner. And if I'm wrong, I like, even when I leave midday, like sometimes I go to the gym midday because I've been up since 4:30 and my mind is jellied at midday and I'm good for no one. So that's what's kept me sane since 1998. I've been doing this. I do not sit at my desk between 11:30 and 1:30, and I will tell everyone out there, you should not be doing that. You should be refreshing yourself so you could trade the close. But anyway, I'll put a stop in where the trade changes, not my P&L. Like today was a good example. Okay, you know, raise your hand if you were in Netflix. Okay, I was in Netflix. So Netflix, if you take a look here, let me put on the, Netflix is up there. So let me put this here. Let's see if it goes over. So can you see Netflix a little inside?
You got to press share your screen.
I'm not sharing.
Yes.
Okay. Like my manager. There we go.
There we go.
See it?
All right. Yep.
All right. So here's the level 2. Here's Netflix, right? Okay. Here's the daily chart. Here's the level 2 of it. The low of the day was 414. Okay. I came in long Netflix, and I added to it early when it took out this 418, and it did go as high as 420. And then
Okay.
through the Fed, I was like, if things get really weak, I have to get out of the way. So if Netflix breaks the low of the day, it could go red, and I don't want to give back more money. So that's where I put my stop. So if you look
Okay.
here and you go just real quickly, I want to continue this thought here because it's very important.
Yeah.
Very important. So here's the day chart, okay?
Mm-hmm.
And if you go back here, okay, um, bottom line is I put my stop in like 413.80, and I almost got stopped out because it just tried to get through that low. And I was like, I'm going to give it a little bit below there. So they tried to stop everybody out. It didn't happen. And if I would have had too many shares and I would have been too tight, chances are it closed $5 higher. So if you're too tight with your stops, chances are you might be right, but you might be out of your trade because of the way the computer's traded it. I'm pretty proud of myself because this is the low of the gap. This was 414, so I put my stop in $1 below it because I know that they try and search for stops, and I just stayed with it. So kudos to Red.
Kudos to Redler. Eli also asked, when you scalp, what type of setup do you specifically look for on like a 1 minute, 2 minute, 30-second, etc. basis?
Same chart patterns, I use on the daily. I have bull flags, triangles, pocket pivots, and I look for something to get above a prior high if it's tight, above a prior consolidation if it's tight. Sometimes if it's just for day two or below. So, when I scalp, they're all different types of setups depending on the day. Sometimes after like 3 days, maybe it pushes above a level, you play it, comes back below it, and then you short versus that level. So it's all different types of stuff.
Okay.
I'm not like a one-trick strategy pony. I'm just a multiple trick old dog that's learning some new tricks now.
Shyam asked, do you mainly manage trades on daily charts? Says he's never seen you use intraday charts. Would that be correct?
I do manage to trade intraday also. Like today,
Okay.
I did a 130 powwow heading into the Fed, where I show like I do have 3 and 5 minute charts up. I make most of my morning strategies off of daily charts because I like to know where bigger levels are, where the rubber match spots are. But then I like to use my daily charts to see, how it's trading intraday to manage my size. So again, did I leave the charts up here? No. So if you look here, if you go back to the screen share, so this is Netflix. So it was good to know, So basically, it was good. You could see intraday it gapped up, okay, and held it. So it was good to have a good 3-5 minute chart. And then once it took this out, you could have added to it, right? This is a gap up, held, bull flag, push, and then didn't do that here. So that would have said it. So hopefully you sold some strength. And then this is what you had: a bull flag continuation here, you had a bull flag breakdown, but then all of a sudden, if you had the chart up, you would have seen where big support was, which wound up holding and then went right back up. So although I was very happy with the daily chart here, it was good to know the levels of where it's been during the course of the day, besides the VWAP, because the VWAP has been very important also.
Great. Andrew asked, he said, hi, Scott, wondering what process you use to document your winners and losers. How do you reflect and learn from your trades?
Well, I don't really document. When I was younger, I used to keep a journal, and I think every young trader from 1 month to 3-4 years should keep a journal. That's how you create your inner trading voice, which then gives you an intuition on how to react around certain areas. I'm pretty, I don't remember people's names or when to put the garbage out, but I can remember every price and every trade in my head because that's how many times I think about it. So usually, like in the morning with my process, I know what positions I have on. I see what the futures are doing. I'm in my sauna doing like 200 reps to some kind of motivational video, and then I go in my ice barrel and I sweat it and I get it all down, and I'm sitting in there with my dog in the moon and thinking about multiple ways I'm gonna adjust around my positions based on what the futures are doing. So I think about it in a lot of different ways and internalize it. That's why I could remember it. That's why maybe when I get introduced to someone, I should think about their name like 4 or 5 times so I'll remember it. but just in general, I do reflect. I think reflecting is good. And, it's
Hmm.
always good to sit back. And that's why sometimes I look at like weekly charts and monthly charts and I'm like, wow, I'm like, you could have seen this here, or even daily charts. You could learn from looking back at charts on what it looked like after the fact. So when it's in the moment and being built, you can have more confidence to react when how it's going.
Mm. You've said a lot of times that you sometimes write better than you trade. As with your position with T3, you're not just sitting there trading by yourself. You're writing a morning note. You're writing a lot of analysis for traders. You're sharing charts like these charts you've been showing us here. So there's a lot of things that you see that you don't always necessarily execute upon. How do you
Oh, thanks for reminding me.
You're the one who says it. But how do you avoid having like FOMO with those kinds of trades and maybe learning from it and saying, okay, I missed it here, but I'm not going to miss it again in the future?
It's awesome. Like, again, I write a note every single morning. I do 30 charts
Hmm.
every day. I don't have the
Hmm.
brain power to execute on all 30 of them. I usually choose 5 or 6. And sometimes I don't trade them well either. I get in too early. I get too much size. I throw it on, and then the thought process winds up working out, and the trade winds up working out. And I wind up losing in it. And people on the opposite team are like giving me a high five. Oh, that was a great call, man. Oh yeah, great call. I didn't make money. Like 2 days ago, I put the bear flag of Tesla in there, and a lot of people made money short Tesla, and
Mm.
because I didn't want to do that one. I don't know why, and it was a great trade. But so I
Hmm.
wrote the strategy better than executing it on it. And then
Right.
even today, like I don't trade a net. So let's just go to that chart, which this one I was okay with because I'm like, you know what? It was just one of those kind of gap and go pro gap strategies, and I don't really trade this one. So I
Hmm.
put it. Oh, actually, this is what I said. Here you go. Aina had a
Yeah.
big pro gap post earnings. Some are long versus 187, which is right here. That's the gap. Same language I used in Amazon. Same language I used in Netflix. Because that was the
Hmm.
strategy. Maybe you can get above 201 and give you a big trade. So why 201? That was the post earnings high. That was right here. That was
Hmm.
reactionary. And look at that move. I did not trade it once today. 7 different people like, oh, great strategy on ANET. I made a lot of money. That didn't upset me as much as because there's only so much real estate that I could look at and trade. I was trading Meta. I was trading, what's it called? Microsoft. I was trading Netflix. I was trading the spies. I was trying to interact. I was trading AMD. I was managing my options. So I didn't care that I missed that. But that was part of just the 30 charts that I put on the alerts and the alpha team, which is great. Um, sometimes over it's my stock and I just a little wrong, it just, it eats at me. So I'm not saying I'm a perfectionist, but I like to be able to perform as well as just be the chief strategic officer. And usually I do, but I'm going to be fully candid. In the last 4 or 5 weeks, it's been a little bit tricky, and I myself, I'm trying to dig myself out of a little bit of a hole too.
Hmm.
And some people are like, well, you've been dead on. You called the summer top. You did this, you did that. You had 2 perfect buys in the blood in the street account. You should be killing it. I'm like, well, yeah, just trying to stay sane. But
Hmm.
anyway, it's every trader goes through all this emotional stuff. That's why you have to be grounded. That's why you need a process and a routine. That's why for me, every day I'm in the sauna, I'm listening to podcasts, I'm going in my ice barrel, and I'm starting my day fresh. Get rid of the last
Right.
day. I came up with this whole mantra. It's like next setup, think clearly, execute with confidence, net money, next trade. Boom, boom, boom. Comes from the Creed movie of one punch, one round, move forward. So that's what we're just
Hmm.
trying to do. We're trying to move forward and not look too much in the past, except for learn from it here and there.
Pull that chart down just for a
Oh,
second. Yep. No worries. You're
yeah,
good.
yeah.
So you mentioned you mentioned during that like ANET's not your stock. It's not a stock that you like to trade a lot. Every trader, has their kind of basket of stocks that they're always looking at, always going to, always playing. What would you say your like top 5 tickers are, and why do you
Mhm.
like those stocks so much? Like, why do you like to play them so often?
Well, I like to play stocks that reward you when you're right,
Hmm.
so and that move. So, there are a lot of people like testing out the alpha team today, and I showed them my 30 stocks in the alert section. So I have a
Right.
go-to list, and those go-to lists are usually the ones that I look at, and then I just have them in different lists of setups, like A setup, B setup, C setup. And when they get into the A setup, I hyper focus on it. And I would say Tesla's probably been one of my best trading stocks that I have, over the years because it moves.
Yeah, it does.
When it triggers out of a pattern, you get paid both ways. I've traded Apple a lot recently. I haven't as much. Um, Netflix from time to time, when there's a great setup, which there's been since earnings. I didn't trade it before, and it's made me a decent amount of money. I would say I'm pretty decent at trading NVIDIA and AMD as a group with SMCI over there. Microsoft, I actually just really started getting back in tune with it again. But typically, the sectors, the FANG or whatever you call the Magnificent Seven now, then some semis, and then some one-offs. When things come in play, I usually have them on the list and I go to them. Like when AI was a great stock, I was watching it every day and trading it with everything else. And so I try not to be stuck on names that might not be working, that are old names, and look at the new ones, because usually new bull markets have new leaders. But I tend to have an arsenal of 30 stocks I look at every day, and then I probably change in and out maybe like 5 of them.
Okay, great. So just for our audience, we're coming up on like the last 15 minutes here. So here's our kind of final call for more questions. Go ahead and get those submitted now so I can make sure to ask Scott them before the end here. But Scott, how would you describe the current market sentiment and action? I think we've seen a bit of a turnaround these first 3 days of this week. So how would you describe where we are right now?
I'd say cautiously optimistic that we could have a trend that will stay intact for the next few weeks, where you can get paid for sitting in a few things 1 to 3 days and massaging it. Like if you look real quickly, I'm going to do like a chart of Meta, for instance, just for right now. Let me go share a screen. Let's see, share.
Yep.
Like you were actually able to, this was post earnings. I think I got long into here. You were able to buy a dip, and then able to add to it above yesterday's high, and now it even looks like it's clearing this spot. So I do feel like in my mind, you can get back up to this area. So between here and there, I'll be able to trade it. But for the first time, you're able to buy it higher, not just misdirection. If you go to say Microsoft, also Microsoft, I think I got long it somewhere in here, added to it, was able to buy a dip and stay with it yesterday, and then today you were able to add here, and then you even add a little bit here. So it's like it's finally like trending versus just like this mishmash was gross and horrendous. Now it's like paying you to stay in it versus making your day miserable.
All right.
So I think cautiously optimistic that we can go with some leaders, and then if the rally continues, maybe we could expand that to some second, third tier names that could also have good setups and join the situation.
Okay. You kind of already, okay. What stocks or sectors overall would you say you're bullish on right now, and why?
I think mega cap tech is a little bit safer. It's been trending and it's been paying you. No, but then you get also other trades. Like, so let's put this share screen again. Like I don't love some of these other sectors, but like I went out and bought calls today on the IWM. I'm like, IWM just held the bottom end of this channel, which is down here, and I'm like, if we're going to see a move into the end of the year, somewhat, not a huge move, this just held this spot, and why can't it get to 169? I'm like, I don't love it. It's not something I'm going to hyper focus on. If there's a good setup, I'll do it. But I bought some 165 calls just in case it can go to 169 in the next week or so. Okay. So I'm like, hey, it's worth a try. Let me put on some options. Then maybe I'll even put on the stock. And then, so there are some things I could play catch up. There's some things that are leading. There are some things that could get good setup. So for now, I think a mega cap tech is probably the place that will be the most forgiving without the least amount of hiccups, based on we have to get through Apple tomorrow. And then if the rally extends, you could start looking for setups like one-offs like this, or even I bought some FXI calls today just because I figured if we are going to rally somewhat, China, which has been really weak, is hovering on support, and maybe they come out with some kind of stimulus or whatever, and I bought options on, not the FXI itself.
Mm-hmm.
So once rallies kind of start, you could throw a few little things out there, and then if they start to trigger and you build confidence, then you put on other different kinds of risk around it. But I do think I'm going to try and stay with. I came in long today: Netflix, Microsoft, Meta, and there was a fourth. And spies, I feel like I can massage those and trade around those. Besides other things here and there.
Great. Okay, so then on the flip side of that, what would you say you're feeling more bearish about, and why?
I'm going to stay away from the banks. I feel like there
Mm-hmm.
could be some headline, rates stay higher. We haven't heard much from the regional banks back in March. The regional banks all pretty much they had a downside in news, and I just feel like there's no need to be there. So I'm going to
Yeah.
just kind of stay away from there because same with the small caps and ARK have been the same, but I just feel like there's a little potential there, and I could do it with options. I'm not really worried if I'm going to miss a move in JP Morgan or Morgan Stanley that are at 2-3 year lows. So
when you're putting on those option spreads, like you mentioned, what type of time frame do you typically buy those in?
depends. Like on Monday,
Mm-hmm.
I bought the SPY calls for Friday, thinking that if we're going to get a rally through the Fed into the jobs report, I liked it. For like the IWM, I don't know, with the spies being a little overboard, I'm like, I don't think Friday's enough time. So I went out to do the following Friday. I'm like, so if we're going to continue this rally and jobs report is light and we go, I have enough time between now and next Friday versus, just this Friday. So sometimes I give things more, or if there's like a binary event, then I know the date that I'm looking for some type of action. I'll have to pay for the time premium, and I go a little bit closer. So it all depends on the play.
Okay. Look back on this week. You don't have to necessarily go the past 3 days. You can extend this to the past, like till like last Wednesday if you want. But tell me about the best trade you've had and what made it go well.
Best trade, Netflix. Really went back.
Mm-hmm.
You go back to the chart of Netflix, and I'll share the screen because it was calculated. I actually had two decent trades in it. So first, I bought Netflix. I think on this day versus the gap, because that was a strategy. And then it went up and did a little red dog reversal here on this day. And I didn't love the market. That was the end of last week. I'm like, let me just take the trade. Took the trade, got out of the way. And then all of a sudden this happened. I'm like, the market's acting a little bit better. I think, that if we act well through the Fed, this could be a leader. So I went back to the trade on this day. I bought it yesterday, added, stayed, and it's so far probably a nice P&L winner for me this week. And I stayed through it and did different kinds of trades with it. I didn't say, I can't go back to it because I sold it here. No, I went back to the trade again, and it was still calculated. And sometimes it's hard to revisit a stock if you sold it, because I didn't participate in this day. It was up, $10. I'm like, everyone's like, Red Dog, you're out of it. It's going to go through 418. Well, anyway, I got back in it because it rebuilt and proved it could hold the 8th day, and then was able to participate. So it was just a good mental thing and a good P&L thing.
Okay, great. Okay, and then on the flip side of that, talk about the worst trade you've had over the past week and what made it go wrong.
What was my worst trade? Well, you know what? I had a lot of little paper cut trades. I didn't like break any rules or do anything bad. So there's not one thing that stands out where I'm like, I got too big and I got too stubborn and I didn't honor my stops or this and that. Yesterday I was up a lot of money by 950, and Nvidia, broke below this spot here, okay, which was like 409 and then 398 and 392, and then I kind of saw that it couldn't go green, and I just chopped up and didn't give it enough space and didn't have the right stop, and I ended up losing some money in it. Where all of a sudden, look at these 2 days right here, and I didn't revisit it, and I ended up losing a few $1,000s when I could have made a lot more than that if I would have just said, hey, we did a red dog reversal around 398. I'm putting my stop at 392, and then boom, you had some follow through. So it was just I overcomplicated the trade, and I didn't need to.
Okay. All right, Scott, you've mentioned this a couple times over the past few months that you called the summer top. It was what, back in July, right? That's when you called that?
Yeah, right there. It's
On
July
the cues?
Yep,
All right.
July 19th with Fox
So
Biz.
we look at the trade, or we look at the chart, and that definitely was the top, and since then it's been a downtrend. Do you think we've seen the bottom?
Do I think this 334 in the Qs is the bottom heading into the end of the year?
Yeah.
I don't, at this point, I don't think we're going to see that spot again,
Okay.
into year end. I can't say first quarter or second quarter of next year, but I
Yeah,
would think,
just this year. We're
yeah,
thinking
I
now
would
into
think
the
that
end of the
I
year.
would think between now and the end of the year that this this low, and I'll go one step further. Um, let's say even here, it shouldn't if the market's going to be any good, it shouldn't get back below this spot, and it actually even shouldn't really get back more than half of this bar if we're going to just say, I have to change this up a little bit just because at the end of the day, that's the where the this has room now to this area. If it's going to get to this area, which is the descending trend line that I got rejected here, here, probably doesn't come back below this 351 anytime soon, let alone make a new low below 342, unless, God forbid, something crazy in the world blows up. Which we don't.
What would you think it would take to change the trend, the uptrend that we're now on,
Um,
if
I don't
anything?
know, because I feel like so many stocks, companies that even if Apple is soft, it's kind
Mm-hmm.
of unique. They're in a different business than obviously Meta or Netflix or Microsoft.
Right.
The, the iPhones, which we all love, and it goes through cycles. So I don't foresee. I don't know. We'll figure it out. If all of a sudden tomorrow this bar turns into a red bar and matches it and it's a trap, then I would say, hey, maybe I gotta be careful here with tech.
Mm-hmm.
So something in the action. But other than that, we've heard of antitrust. Even with Meta, they're trying to sue it for making kids get attached to their phones and devices. I don't know. I just think that I'm not going to overthink it. We'll see how it goes. I think right now there is some room to 362, and then maybe somewhere into this downtrend line. How it gets there, we'll see. If we open down a little bit, we'll see if it goes red to green. If we open up a little bit, we trim some and see if we could buy it. But as of right now, I would think it doesn't break below 351 and going into the end of the year, and let alone this.
Right. All right. So final thoughts here, just as we head into the end of this week. What are you focused on? What are you doing? What's your strategy, etc.?
What is my? I'm just going to try and stick with some of the trades that I put on earlier in the week and massage them and not overtrade them and give them the right amount of room and then hopefully at some point, continue to get paid on them. I know that we have Apple Thursday, so you don't want to be too big just in case. And then on jobs report Friday, I feel like once we get a little bit of confidence that things can continue, maybe then I'll look for some other setups and some of the second and third tier names for cash flow. But for now, it'd be nice if we could get some kind of continuity in the next few weeks and make some money and massage the trades. And if all of a sudden it changes, that's fine too. I just want to be thinking clearly enough to see when that happens. Because you could look at this, you could look at the chart of just like the XLE. Everyone thought that the XLE could do no wrong, was about to break out above this 2-year range, right? Here's your 2-year range. Oh, energy so easy, so easy. All of a sudden, if you didn't see this day on October 20th and you stayed long, went from being special above the moving averages to boom, right to the 200 day, just like that. Boom.
Yeah.
You missed that day, you could have got your whole month ruined or trade ruined. So I just want to be able to be in the right frame of mind to see things clearly. So if things continue, I could stay with them. If setups come up, I could execute. And if things change, I want to change fast so this way I don't get caught.
All right. Go ahead and pull down the chart. We'll
Yeah.
close things out here. All right. So thank you, Scott, for joining me for this today. It's a really great conversation. To our audience, thank you for joining us as well. Again, Scott is the leader of T3 Live's Alpha Team virtual trading floor. In that room, also, Dan Darrow works alongside him. And Dan will be joining me for our next event next week. So I'm putting a comment in the chat now with a link to that. Oh, Scott, really quickly before we close out, I missed a couple audience questions. So just really quick, I know you have to go in 2 minutes, but Ryan asked your view on NVIDIA and can it possibly upside surprise still in its report in 3 weeks?
Well, 2 days ago it looked horrible. Looked like it was ready
Mm-hmm,
to break below the neckline, and there was a
mm-hmm,
small trade there. If you 2 days ago you could have made a lot of money short real fast, and then it turned into a red dog reversal buy to relieve some pressure. Now I
mm-hmm.
still think it's in the range, and if sentiment's going to be better, it'll be glass half full on Nvidia, whereas on Monday it was glass half empty. So there's still a chance, and earnings aren't for another 2 weeks. And if they couldn't
Right.
sell AMD down on the bad guidance, chances are, I would approach Nvidia with your tier system and be specific on prices because you could be wrong one day and it trades pretty loose and wide. But I do think it's still showing leadership capabilities, and now for back in glass half full type market to be long, it's something that'll probably react better and act better.
Okay. And then quickly, Craig asked if you mainly trade stocks during the day. I think if he's asking if you mainly day trade, and how often do you trade options?
Well, to be honest, I have a portfolio approach at times when the market's good. I try
Mm-hmm.
not to, I could do everything. I could, when the market's great, I could have swing trades on. I could have my day trading account taking advantage of the opens based on emotion. I could have options based on where we are in stocks, and then have a box that matches it. And I try and be like a PM that puts money to work when it's rewarding you for that. And then there are other times when volatility is high and things are choppy to the downside. It doesn't pay you to sit in things, and I'm in like mostly cash. I'm just testing levels, and I'm trying not to stay in trouble and make less and have low gross, low net, which has been a lot since 2021. It's been a lot of low gross, low net, not using a lot of my buying power.
Mm-hmm.
Besides one or two good active sequences that we had. So at this point, I'm going to hopefully be able to put some risk out there and stay with some trades and make some money the next 2 months because Hanukkah and Christmas are coming.
All right, great. Okay, this was great, Scott. Again, for everyone who's with us, his Dan Darrow will be with me next week. If you were in the Alpha team during Fed Day today, you got to know Dan probably a little bit. He's an options specialist, so we'll be talking a lot about options next week. Thank you, Scott, for doing this today.
All right. Thanks for having me. I love it. And I'll see you soon.
All right.